Up. Basil Chapman, what's going on?
What was going on is that I spoke to you a week ago, and the Dow was pretty close to where it is right now, 34,654, just just a few hundred points off the all-time high. And what I said to you is what was fascinating in this particular phase is that it almost seemed as if money was being taken, especially when you got light summer trading, money was being taken by the stocks in the Reddits and the Robinhood, that sector, and that the Bitcoin was kind of vulnerable, and that in the speculative area to take its place, we might find that the gold contract is actually doing a lot better, and that there are stocks within groups that are doing just fine. They ho-hum. They're not doing anything bad or anything good. They're just kind of stuck. But within that, you've got stocks that are moving big points up and down intraday. And I think that that's a little unsettling to the overall market. And one of the things that I'm kind of fascinated with is that we've seen this. I've spoken about sector rotation for months. I've been saying we're basically looking at a consolidation. It's like a high-level consolidation where the market, always think of the scales of justice. You've got the scale on the left and you've got the scale on the right. And the market's always trying this balancing act because money is energy and it's always going somewhere. You've got to try to find where it is. So in this particular, and kind of answers your question from earlier on, where you can see inflation, you can feel inflation, but how come yields are doing what they're doing? So this is a complex market right now, but all within a trading band. And you can see that, for instance, the Dow holding very nicely, walking this 14-period moving average in the daily chart. I love that. We've been long since last March a year ago, under 21,000, still long. Then you've got the IWM, the Russell 2000, if I can just get that up here, and the Russell 2000, which has the small caps, but it's not so much that it's the small caps, it's what's within the small caps. And I think that kind of answers some of your question, because within the small caps, you've got oils, you've got financials, you've got a lot of the sectors that are like, for instance, the regional banks, and then you've got your money center banks. Well, the money center banks, you've got the Dow and the S&P kind of capture those. But the smaller banks, which are doing very nicely, are in the Russell. So I think that what we're looking at is the Russell is within 1.5 points of an all-time high. And I spoke, we are, for subscribers, we've been long from about 173 for quite some time. It's at 233 right now.
Nice
and
move.
Yeah, it's nice, but it's also kind of confusing because it had this pattern right here, this oval pattern, this what I call the stork leg formation, right here in the weekly chart. That oval pattern says you can go sideways for quite a bit longer, but when you break out, especially to the upside, that's where you got to start monitoring it, because if it goes, how far it goes above the arch of the oval, that would be at 234.53, the all-time high at this peak E, is going to be really important, because the higher it goes, the greater the chances are that you've built a very strong base in the midpoint of this whole oval. If it just pops up briefly and then comes right back in and says, whoops, now you've got to be somewhat careful. So it's just an interesting moment in the market where you've got, really, it's a handful of stocks every day, and actually on any day that you look at it, you can be surprised to see different stocks. It's not the same stocks that keep going up. It's a rotation. So that rotation says to me, in a sense, we're looking at somewhat of distribution, but at the same time, there are things that are working. For instance, the IWM, for our portfolio for subscribers to my opening call, IWM within fractions of an all-time high. The Dow within 300 points of an all-time high. A, which is Agilent Technologies, at 138, 140.32 just a week or so ago was the all-time high. We've been long since 70. We've got a number of issues like that. IAI, I've spoken to you about this for about a year now. I've been saying the IAI, the iShares of the broker-dealer and security ETF, all-time high 3 days ago. It's just pulling back a tad at 102.47, where we've got subscribers that have been long since 45 back in March of last year. So I'm looking at this and I'm saying the extension that we've seen in these monthly charts is quite extraordinary. This is just a leg B. On the Chapman Wave, we look for the fourth highest peak, label it A, B, C, D. D is where other things can happen. This is only in leg B, and we've made a new high for the month of June. And if you look at the S&P, I'll go to the SPY. It's a little easier. Most people have SPY. They can look at SPY. That's the S&P, the Spider Fund. All-time high. 422.82 was the last high, and today it went to 423.21.
Yes.
And this is still only a leg B in the monthly chart. So it's really hard to define it other than to say that the phase right now is still to buy the dips. That's what people are doing. It looks, visually, it looks like we're getting a little toppy. But as long as we keep holding these supports, it's going to be really important. It also makes buying new stocks, meaning that you've got to go to other areas that have been lagging to find bargains. Because, yes, you could pick up the stocks that are making new all-time highs, and stocks that make new all-time highs very often continue to do that. But the risk is getting greater. So if you can find stocks that have been beaten down, that are starting to show some support, I think that's the way to look at it right now. So all in all, we're very selective in what we're looking at for the portfolio to add new stocks, and at the same time trying to build a little bit of a cash position so that at some point we will see some kind of a decline, and you want to have money ready. So it's an irony that we're at highs, and yet I still feel somewhat cautious about the whole thing. I'm not that convinced, although the price is, hey, new highs and new highs. This is something not quite right, because there are so many, you were speaking about a little earlier on, there's so many facets here that don't make sense for those of us who have been in the market a long time. They're different, they're just different, maybe we can call them different statistics that we have to look at, or different sectors, or different...
we may be going to get a new lesson.
Oh, that's exactly right, a new lesson. We're always
Listen,
ready for
folks,
new lessons.
come over to our website at TFNN. You're going to hit newsletters. You're going to see the opening call right on the left-hand side. Just hit that button. You're going to get a great newsletter. Basil, you have a great one, safe one, and we look forward to the program tomorrow.
Thank you, Tom. Same to you.
Thank you. Stay right there, folks.